Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again on euro currency as usual. So recent action, as you can see, has confirmed our doubts on the perspective of Monday's rally. So we said that it's not quite reliable. Mostly there were some other reasons for that, but from the technical point of view, if you remember, we have mentioned major targets, the objective points that haven't been reached, and that really raised some concern on reliability of the recent rally that we've got on the Monday. That's why we said, well, maybe, but on the intraday chart, euro should pass some test of validity of the recent rally, and particularly speaking, if you remember, market have to hold above the 123 area. But as you can see, recent action, this hasn't happened. Market has collapsed and raising this monthly upward action. From the daily point of view, daily perspective, I mean the daily chart, it looks really bearish because you can see that the drop, we have the tail closing. Yesterday's was significant drop down, and major target still hasn't been reached. It's 122 areas, COP, A, B, C, top, minor, 618 extension target. Stands right here. As you can see, daily oversold is not a barrier right now, so because the target stands above this blue line, trend stands bearish. Also, guys, market already has passed through all FIB supports from this most recent leg. So actually from this area right to the target, market has no real barriers. So major reason for that drop yesterday, guys, maybe you heard something about it. That was the rise of the Fed Fund futures. So as you know, the Fed Fund futures, they indicate the probability of the rate change. And when the trading basis, it's a difference between the 100% and potential rate. So when the Fed Fund futures rising, it indicates that the investors expect rate increasing or some more hawkish comments from the Fed. So this is very important, and actually if you are using of the Chicago Mercantile Exchange Fed Fund watching tool, it shows the probability of the rate increase in different months. That stands mostly based on quotes of the Fed Fund futures. So yesterday, the Fed Fund futures shows the positive dynamic, and that was to indicate that it's really some expectation are rising on the comments maybe from the Fed on the perspective of the United States economy. That has pushed the dollar higher, and all dollar-related assets have dropped. So you can see the same has happened on the euro currency. On the intraday chart, guys, from the technical point of view, we've got the first target achievement. So you can see market right now stands at the OP. So OP target has been completed. As a result, we could talk about our pattern that we have discussed previously, kind of regardless equal to buy pattern, but it's not really classic shape because you have the some kind of the free leg retracement down. And this is just first point that we have agreed to watch for. But you can see reaction right now stands a bit mild, so it's not really some significant reversal or something of that sort. Maybe we have here the divergence, but divergence definitely will be not sufficient in the current circumstances to talk about the long position immediately. So as we said, well, divergence haven't been formed yet here because the trend still stands bearish, and it's not showing the upward reversal here yet. So anyway, in the current circumstances, guys, we need to get some clear bullish reversal pattern here. I'm not speaking right now on this some kind of the bullish engulfing or something of that sort. This should be some extended pattern, because it's not clear yet whether we will stop at 22.40 or market will drop to 122 to complete the daily target. In this scenario, I personally think that's more probable, because as longer time frame you use, as more reliable and more valuable targets and levels stand there. So in this meaning, the daily dailies overrule the intraday charts. So that's why currently, guys, on the intraday charts, this action definitely not sufficient to speak about. The downward action is over and we're ready to for upward continuation, something of that sort. We need more confirmation. So on the hourly chart, you can see how market has failed our indicative level. So 123, we said market should stop here and turn up. This is indeed bullish market, but you can see it has dropped through it without any respect. So just as it's no exists, so just collapsed here. So by the way, the double repo sell pattern here has worked very nice. At the first glance, it seems that it's kind of the triple repo, but if you will calculate the levels, you will see that there were no close above the 618 resistance of this double repo swing. It keeps initial double repo sell valid, and as you can see, market has dropped later. Right now, guys, while we're waiting what will happen in this area, whether market will continue move to the 122 or not, today actually, guys, will be the day of the expectation. So hardly somebody will make any moves before he or she will hear what Fed will say. But here, guys, maybe some short-term pattern could be formed that will trigger retracement, maybe double repo. Here we unfortunately can't speak about the pure bread and butter, because you can see it's already free closing about the 3x3, but the first level that market should reach stands right here. But it's kind of the bread and butter look-alike pattern could be formed if market will reach the 3.8 resistance on the one leg, and maybe some retracement indeed will happen later. So this just some short-term stops could be formed here while we're waiting for press release from the Fed. But in general, to make the decision on whether it's a good place for taking long position or not, we need to wait a bit more and see what will happen in this area. So around 122, 122.40, maybe market will form some pattern. Maybe this will be bottom line. So market will hit the 122 area. That will be very important. This will be a very important part of the context if we will make the decision on taking the long position. But right now, this is not the moment yet.